When it comes to making money in the stock market, two approaches usually come to mind: stock investing and stock trading. People usually tell you that investing is safer than trading due to relatively lower market volatility over a longer period of time. But considering that we are in a bear market, if you just invested in even some of the best companies like Apple or Microsoft in the past 6 months, you've probably already lost 20 to 30% of your investment. Is investing still safer or better than trading in the bear market? In this video, we will compare the core differences between investing and trading and then discuss which one is better for the current market condition. Let's get started. Although both investing and trading involves buying and selling of stocks, these are two very different approaches. Investors buy stocks with the expectation of price appreciation over time. They typically use business fundamentals such as balance sheet, earnings report, company management, industry trends, and other business metrics to evaluate the quality of a company and the stocks that they issued. They usually buy into stocks when they believe that the stock price is at or below fair value based on the company performance and the stock evaluation, and will only sell the stocks when the business fundamentals or their investment strategy or the market condition has changed. Traders, on the other hand, take advantage of market volatility and profit from stock price fluctuation. They typically use technical analysis, market trends, or breaking news to help them decide whether to enter or exit a stock position. They will typically enter a stock position when certain risk and reward and technical conditions are met, and will exit the stock position when either the profit target or loss limit has been reached. When it comes to time frame, investors usually buy stocks and hold on to them for years or even decades. Warren Buffett once said, "Our favorite holding period is forever." By owning company stocks, investors essentially own a small portion of the company. As the company's business grows over time, so is the value of the investor's invested capital. As for traders, the typical holding period could be several months, weeks, and days for swing trade, and several hours, minutes, or even several seconds for day trade. Traders take advantage of short-term market volatility, quickly get in and out of position, and profit from the price difference. Volatility is the nature of the stock market. Therefore, both investing and trading carry certain level of risks. Investors risk their capital and bet on company's performance and the economic condition. If the company's performance were to go down, like slowing revenue growth, or when the economic conditions start to get worse, like high inflation is what we're experiencing right now, investors could see the value of their invested capital to also go down with it. Traders, on the other hand, bet their money on stock price fluctuation and hoping to profit from buying low, selling high in the long trade, and selling high, buy back low in a short trade. If the stock price starts to go opposite direction once the trader enters the position, the trader could either quickly exit the position and take a small loss, or hold on to the position and hoping eventually the price will come back in his favor, which will normally result in an even bigger loss. So those are the main differences between investing and trading across approach, time frame, and risk. Which one's better? We are currently in the bear market. The price for most stocks have already gone down quite significantly. Usually, this is a good signal for investors to start getting back to the stock market, starting to buy stocks on discount. But considering that we are having an increasing fear of recession, the worst may yet to come. The current market condition is tough for both investors and traders, but I think the favor is actually leaning towards trading activities for two main reasons. Number one, there's increasing amount of volatility in the market where traders actually thrive and can take advantage of even bigger price swings. And secondly, traders can actually make money when the stock price goes down, thanks to the ability to short stocks. Does that mean everybody should quit investing and start trading stocks instead? I think not. Stock trading is risky. Most stock traders actually lose money. Stock trading skills requires years of learning and development, and even that does not guarantee profitability and success. Having said that, for those who are willing to put in the work and has higher tolerance for risk, Stock trading could be the golden ticket to freedom. Profitable traders can make money almost anytime, anywhere. For the vast majority, investing is still the best way to build wealth over a long period of time. Historically, the US stock market has always recovered from previous recessions and crashes despite the magnitude of destruction. And in hindsight, those are the best times to buy stocks. Imagine if you were able to buy Apple stocks during the lows of the 2008-2009 Great Recession. Your investment would have grown for almost 46 times. That's every $100,000 invested back then becomes $4.6 million within the duration of 14 years. Quick disclaimer, this is not financial advice. But for me personally, to be better prepared for the eventual market recovery, I've put aside around 25% of my portfolio in cash, which is ready to be deployed towards a short list of quality stocks every time when there's a market crash. I'm not all in at all, but instead I'm gradually buying into the market crashes and dollar cost averaging on the market lows. Granted, the stock market may continue to go down, and no one really knows where the bottom is. But know this, not many people can perfectly time the bottom of the markets. For me, my investment thesis is to invest in the great companies that can last for a long time and continue to produce value through the period. I'm not trading my investment positions, but instead I earn a fraction of great businesses who are working hard every single day to build the best products, provide the best services to grow their business every single day, and eventually the value of my investments. Alright, I hope this video has been helpful. Please give the video a thumbs up if you enjoyed today's topic, and please comment down below on whether you're a trader, an investor, or both. And please consider subscribe to the channel, and we can continue the conversation in the next one. Until then, stay invested, stay positive. Cheers.